If you've been researching XRP lending, the biggest question is probably simple. Is it actually safe? XRP can't be staked natively, so lending is an opportunity for holders who want to potentially earn some yield on their XRP. One platform offering this is LendProtocol, a CeFi lending platform that is built around XRP ledger. So in today's video, instead of focusing on just the returns, we will take a look at safety, collateral, and overall the risks involved with XRP staking. Before we start with checking anything out, you need to know that this video itself is not financial advice. Don't take it as one, this video is education purpose only, and if you're thinking about checking, joining, or maybe investing into any crypto project, definitely do your own deep research. So now guys, starting on the website, the first thing that we need to explain is how XRP lending is actually working. LendProtocol says that XRP and RLUSD deposited on the platform are deployed to institutional pre-vetted borrowers. These borrowers pay interest for the liquidity, which is how lenders get their yield. The platform currently offers a stated 12% fixed APR compounded daily with no lockup periods. But this is not XRP staking. XRP doesn't use proof of stake, so there is no native staking rewards in this. LendProtocol is also separated from Ripple's XLS66 lending protocol. XLS66 is a ledger level specification, and LendProtocol is a consumer-facing, which means CeFi platform that person can use directly. Now we are here looking at something interesting, which is 120% collateral ratio. One of the most important protections is over collateralization. So LendProtocol is stating that borrowers maintain 120% collateral ratio. In simple terms, borrowing a $10,000 worth of liquidity would require around $12,000 worth of a collateral. This extra collateral is creating the buffer designed to protect lending capital. The platform also says that it works with vetted institutional counterparties and continuously monitor borrowers' exposure itself. However, guys, over collateralization can reduce risks, but it doesn't eliminate it. Now let's take a look at how LendProtocol says it protects assets on their platform. So first thing that we want to mention is AES 256 GMC. It is encryption to protect sensitive data. Second, there's a mandatory two-factor authentication, including protection from important account actions and withdrawals. The platform also is stating that the majority of reserves are held offline using multi-signature cold storage vaults, which is reducing exposure of online attacks. And also one more interesting thing, the LendProtocol additionally lists cryptographic activity logging, which is perimeter threat protection and an internal risk management framework designed to identify abnormal activity on the blockchain. These are the main secure layers presented by the platform itself. And now we have another important question, and it is who actually borrows the XRP. According to the LendProtocol itself, liquidity is provided to institutional counterparties. We already mentioned that. Next to it there is corporate entities and also pre-screened market makers. These borrowers reportedly go through onboarding and credit vetting before receiving the liquidity itself. So the basic protection model is vetted borrowers, 120% collateral, and continuous monitoring. The platform itself also says that it internalizes counterparty credit risk rather than directly passing borrower default risk to a lender. So now one of the biggest questions, is XRP lending actually safe? Crypto lending isn't risk-free. We have, of course, the platform risks and the counterparties. Now, next to it, adding something like cold storage, encryption, collateral requirements, and borrowing vetting can help mitigate those risks, which is really nice. Also on top of these guys, LendProtocol has featured in section and independently research any publications mentioning the platform itself, and we can simply look at it as another piece of information that someone can include in their research. So XRP can't be staked, but it can be lent. LendProtocol currently offers a stated 12% fixed APR, daily compounding, and also no lockup period. For security, the platform is highlighting 120% borrowers collateral, institutional counterparty vetting, cold storage for majority of their reserves, encryption, mandatory two-factor authentication, and traditional monitoring measurements. Of course, guys, we know that XRP lending, because it is not staking and isn't embedded in the smart contract, always carries the risks that every crypto project is carrying. I would love to hear it from you. What do you think about all of this? Have you ever used something like that? How it is looking to you? Link of this project will be left in the description of this video so you can check it out. I want to thank you all for staying till the end. Here is one more interesting video on this channel, and I'll see you guys in the next video.